Hi there, welcome to Webcat. Did you just receive a K-1 from your investment? And when you were trying to enter the numbers into TurboTax, you saw this line 13 has a number and a code K on it, and TurboTax never asked you about it. Well, I was in the exact same boat as you. I spent hours pulling my hair out, reading dense ass documentations and trying to translate professional tax jargon just to figure out this single form. Since I finally cracked it for my own return, I wanted to share my exact process with you, and hopefully this saves you the massive headaches I went through and makes the whole thing a lot more approachable. The line 13K is for excess business interest expense, and it is famous because it requires IRS Form 8990 and TurboTax does not support it. So it is causing a lot of pain for people doing their own taxes. When I went through that pain, I read a lot of online articles, including IRS instructions. I consulted some persons of expertise and also watched some professional videos about filling out 8990 by hand. But unfortunately, for many fields in the 8990, they often just read out the IRS instruction text, which actually does not help me because I did not understand their terms at all. So after I finally figured out on my own, I would like to share how I did it with an example, and hopefully that can be helpful to you. I will cover the steps of filling out the 8990 and talk about why we need to file it and why it matters and how we may file it. So just a disclaimer here, I'm not a tax professional and I'm just an investor trying to figure out the IRS instructions like you. It is not any tax advice and it's just my personal sharing. So don't just trust my words blindly. It is also just for the US tax situation today, and tax rules change all the time, so make sure to catch up with the news. My example covers just the general cases and may not cover your special cases, so for those, you may have to explore further, make adjustments, and of course, feel free to leave a comment. But if your situation is indeed very complicated, I would say you should just get a CPA and let them figure out the headache for you. And if you think there's any mistake in my video, also please drop a comment and everyone will thank you. And if you find this video helpful, remember to subscribe and not miss our future sharings. So in this video, we are only covering the case of people not subject to the 163J limitation. The bar of that 163J limitation is pretty high, so for an ordinary individual investor like you or me, it's quite unlikely to hit it. That simplifies a lot of things. And my scenario is also a more general case. I have a W-2 job. I invest in standard index funds like VO and QQQ, but I do not do day trading. And K1 is only from a partnership where I am the limited partner and do not have any active participation in how it is run. That shall set our base context. So now let's get started. To fill out 8990, you should just first get your 1040 ready from TurboTax or whatever tool by filling out everything except that 13K number. Here's an example 1040. The numbers are of course hypothetical to make it much easier to follow. Here's a hypothetical K1 where I omitted other parts and only focused on the parts that matter here. And here's the troublemaker, box 13, marked with K. And we should look it up in the code list. K means excess business interest expense. Remember this term word by word because there are quite a few terms with slight differences in wording, but they mean totally different things, and don't mix them up. Now, here is our 8990. Let's go through them line by line. But before we look at line 1, we should actually fill out Schedule A first. Name and EIN shall be straightforward. And column C, because we are not subject to 163J limitation, it is simply your 13K number, assuming this is the first year of your K1 having this number. I will talk about next year's situation later. So 0 for prior year number, and then C plus D, simple math. Now column F, current year excess taxable income. We go back to the code list. It is code AE, usually in box 20. You should check if you have this in your K1. Usually we don't, so it is 0. Column G, current year excess business interest income. is called AF in box 20. Again, you should check, but usually it is 0. Then column H is smaller between column E and the sum of F and G. Plus this part, as we usually do not have that, it's also 0, but you should again check your situation. The class column is E minus H, minus this part that is again unusual, so in our simple case, we end up with 4,000. If you have multiple investments with 13K, you should enter them here too, one row each, and note that different investment numbers do not interfere with each other. In the end, you sum up for line 44, and you will notice that all these non-zero values do not have a place here. That is fine because your line 43 is where you keep your main bookkeeping records, and this is the most important part in your entire A990. Now we can start on A990. Section 1 is usually all 0 for common cases like me. Line 1 is current year business interest expense. That is not our 13K number. This line is usually for people who have their own businesses and pay interest expense by themselves, like for a business loan. Line 2 is disallowed business interest expense carry forwards. And for the first year, of course, this is 0. But even when you're doing it for the next year, it will still be 0 because it says it does not include partnerships. Line 3 is where Schedule A numbers will come, but in our case, that column was 0. Line 4 is generally for special commercial loans, often for businesses like car dealers, so it is also 0 for us. So for most of us, the entire section is 0. But if you have special cases like your personal business loans, your numbers shall adjust accordingly. Now section 2. This is a part that is a bit tedious and gets a lot of people stranded, but it is not that hard if you walk through the definitions. Line 6, tentative taxable income. This is a name hard to understand, and also its explanation in the instructions is equally hard to understand. But for regular individuals like us, this is often just our number on 1040, line 15, taxable income. The next two subsections, for most ordinary individuals, they're just trying to figure out your net business or trade income if you have one. If you have a more complicated tax situation, of course, that could be more complicated. The taxable income on your 1040 line 15 is usually composed of these items: W2 wage, interest and dividends, capital gain or loss, other income, for example, your personal business income. All these become your total income. Then you subtract adjustment to income, line 10, and that becomes your AGI, adjusted gross income. Then you further subtract the deductions, including standard or itemized deduction, and then you get your final line 15, taxable income. So the addition is essentially adding some of the deductions back, and the reduction is to subtract your normal income that is not tied to a trade or business. Line 7 is any item or loss or deduction that is not properly allocable to a trade or business of the taxpayer. That would include your standard or itemized deduction, your line 10 of 1040 adjustment to income, and if you had a capital loss instead of a capital gain, it will also go in here. In my simple case, there is nothing about line 8. And for line 9, I also do not have any. Line 10, amount of any qualified business income deduction allowed under section 199A, that is your QBI deduction, if any, from 1040 line 13A. Line 11, deduction allowable for depreciation, amortization, or depreciation attributable to a trade or business. We don't have any here, but if you do have a side hustle or small business, you may add a depreciation into here. This is new in 2026. So for future years, make sure you follow tax bill reforms to understand the new situations. We have nothing on line 14 from our Schedule A, column F. So adding this up, you get line 16. Now line 17. You have to add up your W2 wage from your 1040 line 1, your interest and dividend, And if you have a capital gain, not capital loss, you add it here. One note here is that the word trade is a pretty strict definition, and as a normal investor who buys and sells stocks infrequently, those stock trades are not what the trade here means. So your normal capital gain still gets added to line 17. But if you are a day trader, that could be different. And also note that you do not add in tax exempt interest because it is not calculated into taxable income at all. And also not a qualified dividend, not because it's not taxed, it is taxed. But this number is already included in your ordinary dividend, so you don't want to double count it. These two numbers, line 2A and 3A, also never individually enter your 1040 line 9, which validates our treatment. So here we add them up and get 55200. We have nothing on other lines, so finally we combine all together. Note that 55200 is a negative number, and we end up on line 22 as 300. This part requires a little patience, so take a breath. If you are following along with your own forms and successfully found all your numbers to get this far, hit the like button so I know I'm not the only one doing this. So, what is this 300? In our simple case, it matches line 8 of your 1040 exactly. If you don't have any side hustles, you likely have this line at 0, and your line 22 will also be 0. But what if your tax situation is just a bit more complicated? Say you have a small business income, or maybe a released passive loss from another investment that finally exited. In those cases, your line 22 number might not perfectly match your line 8 because those things like released passive losses get factored into different lines on this 8990, like line 12. It can get confusing quickly. For our simple example today, the numbers match perfectly. But if your setup has those extra layers and your numbers are not matching up, drop a comment below. I would love to chat through it so we can learn together. And of course, if it gets too deep in the weeds, we can always agree when it's a time to tag in a CPA. Alright, now we have completed the majority of the tough work. Let's move on to section 3. Line 23, current year business interest income. The instruction says the amount of business interest income directly paid or accrued by the taxpayer, so it is not a value for our K-1. It only applies if you have any of that from your own small business, which we don't have any here, so 0. The next line, line 24, is for our K-1 numbers, but our column G is 0, and we don't have anything in Schedule B, so this entire section is often 0 for most of us. And now we go to section 4. You multiply line 22, 300 with a multiplier. In this 2025 instruction, it is 30%. So it ends up as 90. Other lines are 0, so line 29 is 90. Now line 30, it is not 90 because we need to look at the instruction. As we are not subject to 163J limitation, we should follow this paragraph and enter the value of column H, which is 0 in our case. And line 31 is much easier to understand. It is just 0 because our line 5 is 0, which then actually maps to line 2 in this 8990 form for the next year. And now we are done with our 8990. At this point, you may feel a relief, but I know you may feel like this. Wait, what? Where did that 90 go? After all this much work, I ended up with a 8990, essentially reporting 0. So what is the point of all this effort? Well, that is a common reaction, and I was like that too. Here the 90 is essentially becoming a ghost number, which alters nothing. IRS designed the form to accommodate many super complicated tax scenarios, but for many other individuals like me, it simply adds a lot of wasted burden. But that is how, the tax world behaves. So, should you simply skip 8990 because it's always 0? Absolutely no. Even though you are reporting 0 on your 8990, it's essentially just telling us you are not taking any extra deductions from this 13K number this year. What really matters is the Schedule A that you just finished. which serves as a document for IRS to keep track of the certain K numbers over those years. When you finally exit the private equity investment and get the property sold, those certain K numbers would naturally lower your cost basis on your final K-1. And if you never filed to 8990 with Schedule A, you will all of a sudden have an inflated profit more than what you actually had and pay tax for something that you never got. But by having the Schedule A sent to IRS, you can add those numbers back to your cost basis and avoid those taxes. So it is very important to file this even though your numbers are zero. But if this number is zero, the bright side is that you do not have to change anything on your 1040 produced by TurboTax. You just need to attach your 8990 and Schedule A. So what if your line 30 is actually not zero? You are allowed to realize some of the losses to reduce your tax burden this year. Well, that definitely goes a bit more complex because now you should adjust your 1040 by putting this number into Schedule E of your 1040 as something like passive loss allowed. I've never done this for myself, but my understanding is that means you have to go to your TurboTax, locate your K-1 and find where it allows you to enter other deductions and manually add it there, and later verify that it indeed shows up as a loss and reduces your tax liability. And of course, the total carry forward on Schedule A would also reduce by the same amount. So what happens the next year? It's actually pretty simple. Mostly it's the same approach, but now you have a carry forward from the previous year. So let's say the next year your certain K number is 3000. You would enter 3000 on your column C, and your 4000 from column I of your previous Schedule A will enter column D here, and then you get a new number from this year. That is it. So how do we file this then, as TurboTax does not support it? Well, unfortunately, because major platforms like TurboTax, they don't support it, you just cannot easily e-file with 8990 included. So you have to print your tax return out, attach the hand-filled 8990, and mail it to IRS. And oftentimes, that also means you have to paper file your state tax as well. And what if you already e-filed your tax return without 8990? Well, you can amend it via 1040X, explaining that 8990 was omitted by mistake. You should submit your 8990 and Schedule A along with your 1040X, and it's recommended to also send in K1s just in case. This works for past year's tax returns too if you already have skipped 8990s for several years. Okay, now we have completed our task, and hopefully this has been helpful to you. Again, this is Wildcat. If you like this video, subscribe to see more sharings from us in the future. We like to learn and we love to share. Thank you for watching.